Welcome everyone to this week's edition of our bi-weekly webinar. It's great to see you today. Glad to be back on the broadcast and the program. A wonderful, wonderful fall morning, 54 degrees today, somewhat sunny, no wind. It's a beautiful, beautiful day to be out if you are, or be in if you're looking outside watching it as well. So great to be back. And today, of course, is our bi-weekly update to give you what's on our minds, what we've been talking about, what we've been seeing, some of the things that are important right now. A lot of them you see as well. So a lot of these really come from meetings that we've had with you. So a lot of those topics we'll talk about here in just a minute. But if you know me, I like to go big. So grab your Gen Gratitude Journal if you like, and take a moment to write those down as you listen to some of our gratitude. Mine is for family. My daughter turned 13 years old yesterday. My youngest, Samantha, who's in 7th grade, presently writing a book called Literally. I know it's kind of funny, but she is. She's committed to completing it by the end of December, which is quite fun. She actually last night told us the concept for a cover. So I'm very grateful for her, for family, for my wife, for my mother, for my daughter Isabel as well. So I guess I'd say today is family. How about yourself, Ken?
Oh, hello, everybody. Great to be with you all today. Yeah, my Go Big is something that's coming up here near and dear to my heart. We go up to northern Wisconsin every year. We used to do the deer hunting. It's getting a little cold now as I get older. I don't want to get up that early anymore anyways. But more importantly, it's time to spend with my father. It's the one-on-one time that I get with him, which I don't really get a lot with him. So it's the drive up. It's the driving around and just taking the trips on the county roads and the logging roads. So if you've never been to northern Wisconsin, you have no idea probably what I'm talking about. But if you have been, some of those days can be really, really enjoyable. So I'm grateful for what's coming up to spend some time with my father.
That's awesome, Kim. I'm also grateful for the opportunity you gave me talking about travel, because I was going to tell you all a time travel joke, but you didn't like it. So Zach, how about yourself?
Thank you, Chris. Missed the jokes. I didn't do well when you were gone with my own. So, but along very similar lines, just with the beautiful morning and drive this morning, just the chill in the air, and this time of year is just really special. I love Thanksgiving, Christmas time, for all the time spent with family and friends, and just in general this time of year I really enjoy.
Awesome. Thank you very much. So as we move forward, there's a lot going on, I guess, if you will, in markets. There's another a COVID spike. I've actually personally recently heard more people that I know in my circle have COVID, and they're typically between 40 and 60. And it's been both vaccinated and unvaccinated people I've been hearing about as well. So there's a spike going on with that. There's an unfortunate divide in people, depending on their opinions on this as well. We'll address more of that as we go through the book, which we've started in our book club, and that'll be coming up, I think, next week. There's some fabulous pieces called Love Your Enemies, and it's not too late to get in. We can still get you into some of those if you need to. It's kind of late in the game, but we're going to begin that piece. And I really look at this as together we're all stronger in some way. So we want to make sure we're there to support each other. I'm not concerned with what your political affiliation is. I'm not concerned with what your religious affiliation. I'm concerned with you as a person and your family. So as we go through, that's a very important thing to say. And we will kindly if you have any questions or whatever, or if you have any concerns, let us know. We'll obviously go through those as well. The markets have really done nothing but go straight up over the past probably 30 days. So the beautiful thing about it here, and the joke is, oh, market's down. Well, that's all right. Just wait. I mean, literally within a day, it's back up again. So for the first time, we've actually seen sustained money come into the market for almost probably 11, 12 months, which has seen a lot of what's going on. But if you look at the opportunities, more money in cash, more money in bonds, both getting almost nothing for return, or stocks, which are finally going up. So in the second stage of a bull market, often what happens is you see, almost without reason, you think, things continue to go up. The second thing that's occurred is earnings have gone so well that they have reduced what's called the valuation. The price to earnings range of the market has come back into normal valuation in a quick 2 quarters. So all of a sudden it went from it's overpriced. I mean, it's almost like if you drove and you didn't look at the stop sign that was right in front of you until it was in front of you. Oh my gosh, I gotta stop, right? Well, that's not how you do it. You look down the road. You knew this is coming. Stocks often follow earnings, but not in the short term. They do over the long term. Anyway, I don't want to get too into that again on a soapbox on some of that. We study a lot of perspective and a lot of history on this as well. So we'll give you more with that as well. A lot of things that are going on too. Cryptocurrencies are hitting some new highs. We're beginning to see housing cool in a few areas. But remember, we're seeing things that are a little bit hotter right now, like down in Florida and a few other areas. So it definitely is migratory, if you'll see that. Inflation and supply chains are big issues. Right now, you're finding things that you want I know somebody who ordered a Sub-Zero refrigerator. So one of my friends I work with works with some fairly wealthy people. He ordered a Sub-Zero refrigerator and they promised delivery by September 2022. I was one of my friends who's in the golf business for Ping Golf Clubs. Somebody was trying to order some clubs this summer in July. They promised delivery by June 2023. So you're looking at supply chain issues and certain things where the things are stuck on a ship, they can't build it, some components in Malaysia. So that's caused inflation and some tight supply. But as we alleviate some of that supply, there's going to be a lot of new trucks and new cars on the market. Anyway, a lot going on with that. A ton going on with tax law. You've seen some of the tax law here passed in the latest as well. I know we're going to talk about some of those as we go through as well. These are all on the top of minds right now, as well as your personal situation. There's been a lot of things going on too, asking questions about, estate or coming through this, or should I be doing a Roth conversion? And the question, there's a definite answer. Should I be doing a Roth conversion? Maybe. So we're going to look through, and each situation is completely different. So we've been running through those as well. So a lot of what I'd like to do in the beginning is kind of put in a portion that I call maybe our focus. And what I want to do today for the focus, instead of giving you 4, 5, or 6, because I'm relatively, maybe this is a better way of stating it. I can focus on a whole bunch of things at one time which seem unfocused. So maybe our word should be focus today, but actually our word today is going to be stick-to-itiveness. Stick-to-itiveness, persistence. Typically when people say when all is said and done, a whole lot has been said, but not much gets done. So why is that? Simply because oftentimes you'll find people don't stick to it. A lot of talk, right? And probably 1/100th of what's talked about actually people take action. So I tend to be a fan of the people who take action, but here's a sample. If you're looking for something that is the best example of stick-to-itiveness, what would that be to you? To me, it's a postage stamp. Well, Chris, that's weird. You can go ahead and say it. Go ahead and say it. What the heck are you talking about? Well, for me, if that stamp doesn't stick to that envelope, it doesn't deliver on the promise of getting to you. Could there be a better example of stick-to-itiveness? Its sole job in this world is to stick to that letter and get it to you. We rely on it every day. So a postage stamp could be your thought about sticking to something today. Be like a postage stamp. Stick to it so you deliver on the promises that you make. That's our inspiration for today. I've really put a whole bunch of things together to concatenate it so you could see it better. I've got a few other ideas, but before we get to some of those later on in the program, I want to bring up Zach. Let's talk a little bit about the markets. I want to know exactly what's going to happen in the future.
All right, here we go. Can continue to tell you what's happening in the future. Markets will continue to go up over time, and they'll go down, and then they'll go back up again.
Thank you.
But
I appreciate you.
One thing that we've heard recently in reviews since the end of the quarter is, man, I can't believe how much accounts have gone up in the last month, or 401ks or different balances. And that's really because in the last month or two, month and a half or so, we've had a great year in the last month and a half. So we'll share some of those things as well for perspective. But running through, the S&P 500 is up 24.7 on the year, or 9% since the end of the quarter. The long-term historical average for the S&P 500 is 10%. Just received that in a month and a half. So I'm sure there's going to be volatility ahead as always. But as Chris mentioned, with earnings, 82% of the companies that have already reported earnings reported better than expected earnings. One thing that was really interesting recently in Nick Murray's November newsletter is that the S&P 500 dividend has rose 31 times what it was in 1960, or nearly 6% per year, where the consumer price index has risen just 9%. So we wanted to bring that in perspective, that we often talk about just market movements up or down. It's up 24%, it's up 10%, it's down 5%, whatever the case may be. But the dividend alone on the S&P 500 has risen 31 times since 1960. Extremely interesting to look at, and a great point by Nick Murray. The Dow Jones Industrial Average up 18.6% on the year, 6.5% since the end of September. The NASDAQ 23.26, which is more technology weighted, and 10.5% up in the last month and a half. The Russell 2000, which tracks mid cap and small caps, up 22.91% on the year, or 9% just since the end of September. The growth portion, which if you guys remember from all the bi-weekly webinars so far this year, has underperformed the value side of small cap and mid caps, but now is up 13.55% or 9.5% since the end of September. The value side now up 33.04 or 10.5% up since the end of September. So incredible growth just in the last month and a half. But if we remember as well, we had a 5%, almost 5%, 4.5% correction in the S&P 500 in September as well. So on the international side, hasn't gone up near as much in the last month and a half, but international measured by the MSCI, excluding USA, 7.47% or 3.2% positive since the end of September. Emerging markets still lagging behind the rest at down 1.23 on the year and a 1% increase over the last month. We just wanted to take a look real quickly at some of the different sectors that have performed well. We did that a couple bi-weekly webinars ago. Energy is still the top performing sector of the US markets, which is up 56.5% on the year, but it's actually down 11% in the last 3 years still. So even going up 56% in the 1 year, still down 11% in the last 3 years. Financials up 35%, real estate up 32%. And there's only 2 actual sectors not above 10% for the year, which is consumer staples and utilities, 8.5% and 5.9% up respectively. As always, we just give a little update into the treasury yields. The 1 year and the 5 year have increased a little bit over the last 2 weeks, but the 10 year and 30 have decreased. The 1 year 0.16, the 5 year 1.04, the 10 year 1.45, and the 30 year 1.89. Always try to bring a couple interesting facts to you. Not as many as normal on the market side, but just kind of in general, a couple things that we've seen and heard is unemployment in March of 2020, right when the COVID correction happened, was almost 15%. In October of 2021, last month, 4.6%. So just in a year and a half to go from 15 unemployment to 4.6 is a pretty incredible recovery. Also from Nick Murray's newsletter this last month was full of some great gems. 50 years ago, half of the world's population lived in extreme poverty, is now 9% and is continuing to decline. And along with that, a study done at the Brookings Institution from 2020 to 2030, more than 1.6 billion people may be drawn into the middle class, and a vast majority of that coming from China and India. So essentially, if the US population is 300 million or 350 million, whatever it is right now, almost 5 times that will be drawn into the middle class in the next 10 years. So when you talk about opportunities available, like Chris always mentioned with technology, more people buying more things, also drawn to the internet, just incredible of the potential opportunities to come across the world in the next 10 years.
So let me emphasize something Zach just said. So let's say you take the consumers of America and what we've done over our lifetime and companies we've created, Nike, I mean, you can go through a whole bunch of them, right? What could potentially happen if 1.6 billion, now let's mark that, 5 times the US population moving into the middle class, buying things, moving out of corn, rice, and beans for their meals, moving into Nike shoes. What can great companies around the world do in times like that? Again, I've always said this, the ingredients can be there, but that for a great recipe, that it doesn't mean it's going to turn out. But I'm saying there is a lot lying in front of us that could be very prosperous. Thank you, Zach. I totally appreciate that. Good. With that, so one thing I wanted to say, did you guys hear about the ATM who was addicted to money? He suffered from withdrawals. Anyway, Ken, I want you, that's always a good financial one. I know it's horrible, but it's fun, we can use it. Ken, how about yourself? Why don't you bring us some of what's going on with planning right now? There's some incredible big things happening both in tax, and here's the one thing I want to say before Ken goes, just all successful investing is plan-based. We have a plan for every one of you. The basis for your success is based in the plan. We don't know what's going to happen in the future, but we're prepared for whatever it is when it does. So with that, Ken, how about yourself? What's going on in planning? What do you have for us today?
Yeah, thank you, Chris. I've been hearing a lot of great things from our clients in meetings recently, and we met a wonderful family yesterday. And a little silly fact for you guys is that we met someone who has the world's fastest minivan, Mercedes R63 it is. And very interesting. Got up to 165 miles per hour. Every mom's nightmare, every man's probably dream when it comes to a minivan. So anyways, just a little silly fact for you guys. I thought it was pretty fun. What I'd like to talk today a little bit about our tender topics, I'm going to call them. Hearing a lot of stuff in meetings about family planning, family wealth planning. You know, the biggest thing that I think I hear right now is, you know, let your family know your intentions. Let your family know your wishes and be clear about them. You know, some of you have lake homes in the family. Some of you have IRAs in the family. Some of you have other heirlooms in the family. There's a lot of things that every family has that is very valuable to your family. And it may be perfectly clear in your mind, but it's very unclear in another person's mind if they don't know what you're thinking or what you're talking about. So, you know, a lot of you are starting to gift money. We're starting to get more and more requests to help children out, to help grandchildren out. You know, how do we do that? There's many ways to do that. We'll help you through those. We'll walk you through the options. There's ways to give while we're still here, so you can see the gift. You can see the investments, you know, with your grandchildren. There's ways to do it after we pass. There's ways to do it with personal accounts, UTMA accounts, Uniform Transfer to Minors Act accounts, where the grandchild takes over at between 18 or 21. A lot of ways to do it. I don't want to get into all the details right now, but we're starting to hear more and more gifting from you to your family, and we're here for you. We love that part. It's all planning, and that's what we're built for here at Gentian. So another one that came up recently, I'm going to share my screen with you, is basically on the inherited IRAs. I'm going to just give you a few tidbits on this. This is our golden chart that we use from Ed Slott. It's wonderful. This is all about people that that have passed away, and you're inheriting an IRA from them. So again, a tender topic. For this to happen, you have to lose someone in your life that you know. That's not an easy thing to go through. And all of a sudden you have to make decisions about what are you going to do with this IRA that you received, right? So there's different ways to do it. There's different rules on whether we get the lifetime stretch, if you will. There's different rules if we have a 5-year window to take it out. There's different rules if we have a 10-year window to take it out. And you can see that there's eligible designated beneficiaries. There's non-eligible designated beneficiaries. Easy for me to say, of course, right? And there's also non-designated beneficiaries. So how to keep that all straight? It's a very difficult thing to do. This is why we study with Ed Slott. That's why when we go, Chris, myself, we're always out there studying with Ed Slott, and we do programs, you know, 2 or 3 times a year with them, and webinars and things of that nature. So just wanted to share that a little complicated, but that's the stuff that we're looking at for you when you are inheriting money. We're certainly here to help you out. So again, tender topics, be clear and be intentional. When it comes to beneficiaries, before I hand it back over to Chris here, when it comes to beneficiaries, changing the beneficiaries on your IRA is a very straightforward and I'll call it simple and easy thing to do. You know, you can say, hey, I want this person to have 20%. I want this person to have 40%. So think about that as you try to equalize your gifts to people. Beneficiary plan and IRAs, it's a very straightforward thing to do. Now, if you have a lake home and there's 4 or 5 children involved, or even grandchildren involved, and there's 1/5 interest and 1/6 interest, you know, that's a little more difficult to divvy up, if you will. So just know that beneficiaries can be changed based on your wishes. Feelings change over time, you know, and as the old adage says, you know, a family that prays together stays together. And we also think that, you know, a family that talks about wealth together keeps the family together as well when the wealth is distributed. So with that being said, I'm going to hand it back over to Chris.
Thank you, Ken. Yeah, one of the biggest things we've been doing a lot lately is family wealth distribution planning. You are the sandwich generation, so a lot of my clients, you are in charge of your parents. So when a client comes in, this is what we often see. Hey, I'm helping out my parents. I'm in charge of them. I'm really introducing my kids to investing. So it's much more interdynamic than it is than one would normally think so. So those are huge planning ideas we've been talking about. We want to also thank you for introductions to your parents and kids and your friends. We've had a wonderful time lately. We appreciate that. And so we have a Plan It, Live It, Give It. That's what Gentian Retirement is about. We also have a module called Inherit It, because you are also generations that are receiving a lot from your parents who intended to give that to you as well. So I like to mix things up with quite a bit. So rather than going with housekeeping right off the bat, I wanted to give Zach and Ken their chance, and then we're gonna bring Ryan in to do housekeeping here real quick. Then I'll bring Mike in, and then we'll close. But Ryan, why don't you do some housekeeping now? That'd be great.
Thanks, Chris. Happy to wait my turn this time around. We do have a lot of important dates and fun events coming up, so definitely be checking your emails for those. A lot of these events we've already sent out initial emails for RSVPs, but if you hear something that catches your ear that you don't remember, you can definitely email us about it, or can go back through those emails and check on those. But a few dates coming up, excuse me. We have the first meeting of the Gentian Virtual Book Club. That's going to be on November 15th. That's an 11 a.m. Zoom call. We're going to be discussing the first 2 chapters of Love Your Enemies, which of course Chris has brought up consistently over the last couple months. I read it myself as well, and I really have thanked Chris a lot for bringing that book up to me and suggesting it to us, because I agree it's a life-changing concept, and I look forward to being in that discussion with clients as well. November 17th is going to be our next professional development day. So we will have limited office availability on that day, but if something's an urgent matter, we'll be checking emails and voicemails throughout the day to make sure that we catch up with those. That was November 17th again. November 22nd is our Thanksgiving Gratitude Pie Day. Emails for that went out earlier this week. So please, if you would like to get one of those pies, RSVP. And you can let us know what kind you like as well. November 24th is going to be our next bi-weekly update. Also happens to be my wife's birthday, so keep her in your mind as well coming up. November 25th, then of course is Thanksgiving, and the 26th is Black Friday. So of course the office will be closed on those 2 days. November 30th is Giving Tuesday. So that's something where, we encourage acts of kindness, something maybe random acts of kindness, you might call it. Something that my family has done, not every year for Thanksgiving, but my grandparents would give each of the grandkids maybe like a $10 bill and have them go, do something nice with it, whether it's donating it to a charity, or, sometimes we would buy coffee for somebody else in line when we were at the coffee shop. That's just something, kind of share a little bit of kindness and spread a little bit of joy through the holiday season and things like that. And then we would, get together for around Thanksgiving, and we'd get to share our stories for what we did with our $10. And that was always really fun to share that joy with our family then too. And then a little bit further in the future, we have Save the Dates. That's December 9th is the drive-through Christmas lights, the Christmas Wonderland, which we will be volunteering for. And December 21st is Ladies and Gentian. That's going to be the tea and cheer event over Zoom with Lisa from England. And that'll be at 10 a.m. Our time. I believe for Lisa, it'll be something like 4 in the afternoon. But for us, it'll be at 10 in the morning for the Ladies and Gentian event.
Thank you, Ryan. I appreciate it. So one of the reasons I'm bringing on Mike real quick for a couple of things that we brought on, just a quick short summary of all the research they've been doing this last 2 or 4 weeks as well. Mike, how about yourself?
Thanks, Chris. So a couple of things going on internally. We're getting in all of the capital gain estimates for the mutual funds in the core portfolio. We're pretty much just waiting on one last company, and then we'll be able to get some of those estimates out to you, who those pertain to. These capital gains are what's paid out every year at the end of the year that's required by mutual funds. And what we're seeing right now is about 6% across the whole portfolio. And that's going to vary based on what you actually hold, but we'll be taking a look at that for you. And so since the last biweekly update, we have had 10 meetings with wholesalers. And to keep it brief, the biggest piece of discussion is inflation right now. Numbers just came out today. Consumer price index up 6.2% year over year. Now we have to remember that these numbers are year over year coming out of a pandemic. So yes, that number is staggering, but the idea that that is going to persist through next year is something that all of our vendors and those who we work with don't believe will continue to happen. We won't be able to tell until we get the numbers for Q1 next year and some of the other dates throughout the year itself. But right now we're looking at inflation probably slowing down next year, but we're going to take a look at that, and nobody can say for sure. So historically, what is the one thing that's always beaten inflation? Every single equity class. So within a diversified portfolio, which is what we employ throughout, our entire book of business, that's something that we're looking out for. So back to you, Chris.
Good, thanks, Mike. And inflation, remember, over time, this Social Security is indexed to the CPI or inflation. So actually, you all know you get a 5.9% increase. That's the biggest of my career in Social Security. So there is a little bit, at least, of ability to fight that as well. So thank you, Mike. Yeah, we know inflation is a big part of it. One thing as well, Dr. Jeremy Siegel, if you remember, we talked to him about a year ago. He did tell us with all the Fed money that's being distributed out there into the hands of consumers, there will be inflation for 2 to 3 years. So I know our vendors think it'll be next year. Jeremy Siegel thinks it'll be at least 2 more. So you'll see those fighting ideas out there. We tend to sit back and go, we'll see what it is and we'll measure it and we'll respond in kind as we go through. So 2 things. One, Future Loop. There's a whole bunch in the last month that's gone on with Future Loop, from different delivery methods to fight cancer. Merck has a single pill that's going to be effective in England, I think, to reduce the effects of COVID, which is amazing. But more importantly, right now, Rolls-Royce has teamed to give a future of power hydrogen fuel cell module that could power 10 houses. Right now, it's designed to help with server farms as well if something goes down. But there is a day coming, and I've been hearing about this for years, about having a personal dynamo where you no longer are connected to the power grid if you don't need to be. Because many people, if they can get rid of their phone bill, they can get rid of their electric bill, they are happy as get out, even if they pay more. Second thing, in what's going on right now, there's a whole bunch of tax ramifications to reducing the payback of solar. So even in a climate like ours, there may be more reason to look at solar as a consumer coming. There's so many future trends that are coming on, but I happen to think that was amazing. Another one I think as well that was good is there are city by city by city by city by city are offering driverless rides. They're getting driverless ride sharing and also robotic delivery of food. You're going to start to see these drones on streets driving around delivering food to you because of a lack of people. Right now, there's a place called Something Chicken here that just opened in Mequon. They're paying $15 an hour. Guess where all the kids in Mequon want to go to work? They want to leave wherever they are, go work at this. I called it the Chunky Chicken. That's not what it is. My daughter laughed at me, but they're paying $15 an hour and the kids are buzzed. They want to leave their other jobs and go there because it's paying $15 an hour. So you're going to see some inflation just to get help as well. So what I'd like to do as well is begin to finish in gratitude. So there's a couple other things I wanted to mention. Maybe I should quickly, because also in this technology, you saw Facebook change its name to Metaverse. Why is that? We've been talking about Metaverse and the World Wide Web 3, the experiential web, quite a bit. It was early in the year when I was at Abundance 360. We experienced it here as well. And it's kind of flunky. It's not a whole lot going on yet with it, but Mark Zuckerberg has seen what he believes the future could be for both in-person and non-in-person existence. So he's changed the company to look at that sort of a future, which is interesting. There may be a bit of a lull in between, but it's really interesting to watch that. Why I bring that up is that might be a different way that we get together with family. It might be a different way we get together and experience each other over time, but interesting to see that piece as well. Probably one of the most important things I wanted to say, and I didn't start at the beginning gratitude because I wanted to finish in gratitude, and that is what tomorrow is. Tomorrow is the reason that we are all here free and able to do what we're doing right now. So we want to finish in gratitude by bringing up those who've been in the armed services. Tomorrow is Veterans Day. We recognize those who served for us, those who keep us safe, those who now keep us safe, those in the future who will keep us safe. I'm sure you've all had family members who have been in wars, who have fought for us, who have probably died for us as well, which we want to make sure we put a blessing out to them as well. We really want to let you know we're all about gratitude here, but very, very grateful tomorrow to celebrate you who are our clients, your friends, family, those who we know, those who we don't know, who are keeping us safe across all the different armed forces. And I'm going to say the police forces, the fire departments, everybody who works to keep our civilization safe. So we lift them up. We appreciate them on a day like tomorrow. So for myself, I wanted to really represent them in the finishing in gratitude. And I know across the board here, everybody feels the very same way. And we want to make sure we lift them up as well. So with that, there's a whole lot that I really feel grateful for. We here at Gentian Retirement, helping you plan it, live it, and give it. We're excited about helping you with all three. And what we want to do is thank you tremendously for being a client for us. We want to continue with the experiences that you have the opportunity to work with us, even beyond investments. A lot of you came to us for planning and investments. there's other things we do. We know it's about a whole life, and we love listening to what's important to you. So as much as we can help you with that, we thank you. We thank you for your commitment. Most importantly, we thank you for your connection. You make our lives better. One of my clients I just had a meeting with told me that he's been to Texas Roadhouse the last 5 times. He's only had to pay once. People have been paying for his dinner because he wears a hat that says veteran. So he's only had to pay once on the last 5 times, and he's got the means to pay. But that's amazing stuff. So we appreciate that. I wanted to leave you with that high note as well of what people are doing and appreciating for veterans, even as we get close to Veterans Day. But with that, thank you so much. Continue to be grateful. We appreciate your connection and gratitude. And we look forward to seeing you guys and hearing about your holidays as the next, well, let me do this today. It's, my daughter would say it, I could be a little bit wrong, but what we have 20 plus 25, 45 days until Christmas, 45 shopping days left until Christmas. So we'll leave you with that. I appreciate it. Thank you and have a wonderful week.